The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
Welcome all to another excellent day at the headquarters of technical trading and investing. It is the Power Trading Hour with me, your humble, lovable, and squeezably soft host, David White, the koala bear of Wall Street. Just a big huggable lug here on a day where we've got actual action. We got action in this market. We got some action, and of course everybody's been talking about the down move, so we will just act like it hasn't happened. Actually, I'm so short, I'd be bleeding out my eyes if I got any shorter, and I'm pretty much sanguine with this, long overdue, and I see the progression from early this morning on the infotainment television networks on financial infotainment, starting with, this is not a big deal yet. I don't see any problems. By noon, it was pounding on the table that it's time to buy. And, of course, what do we have? A market that just continues to slowly erode away. We have the actual gold miners index doing exactly what they should do. And I've been bringing it up for a couple of days. And you had every reason to believe that you had a sell point in these either the GDX or the GDXJ, and we're going to talk about that today. And of course, even in 1848, they were talking about gold. Today, workers dredging a stream to speed up the water flow into the sluiceway of John Sutter's sawmill in Coloma, California, near Sacramento, strike a bed of soft yellow rock. Guess what? It's gold, folks. But even then, there's no railroads, there's no telegraphs, there isn't jack. And so other than going to some towns like San Francisco or along the coast where some trade can actually happen, news is very tough to get to the other side. So all the miners show up, but it's already 1949. A year from now, before the miners show up, because it takes so long to get news around. They go down there to the Straits of Panama. Everybody gets off. They walk about 30 miles to get back on another ship and back to New York. There's no easy way. And, of course, that's why they're called the 49ers instead of the 48ers, because of the huge amount of time it took just to get information from one side of the coast to the next. But that's, we were talking about gold and gold fever. It's caught people forever out here, but in this day in 1848. So when we're looking at the markets here, want to be always talking about what kind of volume we have when we start the show. We are just a hair under 3 billion shares on the consolidated tape. We've been talking about how that volume has been picking up to the downside. This is a significant Friday move where normally you have very light volume. We are under 1,800 on the S&P cash. And when you look at some of the other indexes that the talking heads on the news we're going to be talking about tonight, we, of course, are talking about the Dow Jones, and they're going to say, the sky's falling, we're under 16,000. And interestingly enough, we've been talking just about how far this market could come back since the huge moves on the upside, and it still wouldn't even hurt the bearish case. I've got several trades on that could pay back over 100% on a pullback, 100% profit on a pullback, and that would only be a fraction of what they can do. In fact, that is kind of my minimum projection on this. One, I was in one that was in the $15 range, lost 30 cents on it, got stopped out and went right back into it the next day. You take your stops, you kind of sleep on it, you come back, and I was pretty much determined that when we saw what we had going on here, that it was time to go full bolt and all in on the short side, and maybe take our stops if something bad happened. But as far as I'm concerned, I am short out the gills and loving it. VIX above 16, peak, hard to get down a minute. I'm just looking in the Dan Polar Netflix free gap play. We're going to talk about it. Individual stocks. That's 19. Okay. Polar channeling Richard Sherman. Okay. We've got I think everybody's getting a little giddy in the den today. So I was just reading a few messages out there. Today we talked about that. But anyway, I wanted to go right to the gold miners ETFs because we've been talking about confluence and just in trending markets, just how absolutely great this works. And the problem is that everybody tries to use it on 2 or 3 candles. What I like the best are candles that have somewhere between, per leg, per trend, somewhere between 7 and 21. Sometimes, like this, you can get upwards of 30 in these trends. And, of course, the reverse or the ABC of that's going to have last day. But it is one of those things where you just have to look and see, okay, is it getting awful close to those confluence levels? For those that don't know what confluence is, it is the agreement between 2 different Fibonacci nodes, and you can see it in the chart in either the Den or Tiger TV. I recommend you looking at it. If you want to know more about confluence and how it's set up, we have videos for the Art of Timing the Trade chart that mention a little bit about how actually to use it in the software, but more talk about actually how it sets up and what you're looking for. Anyway, we got a natural reaction out of a down move, and it's basically the 618 of the last move up. But if you put it together with the previous moves, you find out that that becomes far more probable as a logical place to take your money off of a big move. And in this case, you went from $20 to $24. That's a $4 move on a $20 stock. That's a good move. I mean, I hate to say it, but I think maybe everybody was getting a little greedy yesterday. In fact, I mentioned in the Den during Tom O'Brien's show last night an old saying that goes back to the early 1910s or 20s in the hog pits in Kansas City. And somebody started it, and it's been around forever, but it was up on the wall of the Kansas City Board of Trade when I went in there. And I think it had a quote back in 1918 or 1922 or something like that. And it always said, buy them while they're crying, sell them while they're yelling. Or sell them while they're yelling, buy them while they're crying. And it just seemed to me that everybody was going insane about gold yesterday. Probably a good indication that we were getting ready for some kind of a pullback. And, of course, it had a nice move up. I didn't see the actual high. Maybe someone can tell me in the Den. Just a huge move in gold. Now, the forward contract up here is showing me a 210, but I think we were, I'll have to pop a chart up during the break and take a look, but certainly seeing those particular movements in the GDX. Oop, clicked one too far here. Let me get it back up. And let me zoom in a little bit. Unfortunately, to make this work, we have to sit about 3 feet back from a monitor in case you've ever tried to read it. Anyway, a GDX and miserable pop-ups. We're off, basically flat on the GDX, off almost 2% on the GDXJ or the juniors. So it is not one of these days where, you want to be hanging it out, let me put it that way, especially on the GDXJ. It looked like to me it was far more apparent that we were getting probably to some level. Here's the GDXJ, a little fatter confluence level. You also had a little gap, not too much higher than when we were at here today. So just keeping an eye on this. But if you bought down here in the $28 range or $29 range, you had a run to $38. You got to be thinking about when you're going to sell. And especially when you've come down after a huge down move, there's going to be lots of people just dying to get out of the stock on the upside. And that's accurately what is portrayed when we use these confluence levels. On the way back up, it shows you where the people that were higher than you want to get out. And on the way down, it shows you where people that were long or wanted to get long will come back into the marketplace. But these things can be deadly accurate. I did a special report last week, a week ago Tuesday, on these confluence levels to get people that have the art of timing the trade charts up to speed and looking for these confluence levels. But this is not the only place these things are going to work. And one of the things that did I show it? I didn't. I had the S&P chart. Maybe I'll try to get that during the break. In fact, we'll go through just how far down confluence is on the S&P. And that means nothing. I mean, this would be natural retracements in a up market. You'll see just how far we can go, and nothing gets destroyed in a longer bull time move. I know a lot of people are going to be yelling and screaming, but that goes back to buy them while they're crying. And I have a feeling that we have a fairly decent pullback that's probably going to last somewhere between 3 and 6 months coming before we get a lot of the excesses in the market caused by unintended consequences of QE infinity. So we'll take a look at it. What else do we have going on here? I'm just looking at some of my positions, making sure that we're doing the right thing, and I'll probably be spending the last hour before the Tom O'Brien show tonight looking at these. In fact, I wrote a rather abbreviated Tech Insider today because I think it's probably going to take me 3 or 4 hours to go through all the charts tomorrow and Sunday to get a much better read on exactly what's in this marketplace. But certainly have volume. Some of these stocks will, and some of these stocks will not have volume, and that will be interesting. But don't be surprised to see in a big down move that they're selling gold miners and gold for a little while. Normally off the top, that's not beyond the realm. Now, yesterday we talked about HLF, and interestingly enough, come to find out, someone bought, just an absolute load of puts on HLF right before he came out. 50,000 puts over a couple of days. Imagine that. Someone coming out and knowing that a senator was going to challenge HLF Herbalife, and someone made an absolute huge load on a $9 move yesterday on Herbalife, and maybe they're still in it. But everybody always knows something, and certainly someone knew something in there.
Andy Hecht's powerful weekly newsletter, the Technomental Commodity Report, is going up in price again at the end of this month. Andy's weekly newsletter has delivered multiple profitable trades for his subscribers, even including a triple-digit winner within recent months. Right now is a perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy will also be hosting a subscriber event on Thursday, January 30th, Seasonality in Energy and Agricultural Commodities, that you can gain access to by simply signing up for a free trial to Andy Hecht's newsletter, the Technomental Commodity Report. A 30-day free trial to the Technomental Commodity Report, a free 60-minute live online webinar with Andy Hecht, which will be archived, and you lock in the low price of $49 a month should you decide to continue after your 30-day free trial. Offers don't get much better than this. Act now before January is over and this offer passes you by. Sign up for your 30-day free trial to the Technomental Commodity Report today.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhoades, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Darryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. DirectionShares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the DirectionShares carefully before investing. The prospectus and summary prospectus contain this and other information about DirectionShares. To obtain a prospectus or summary prospectus, please contact DirectionShares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different futures contracts? Now you can with TAZ Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a 2-week free trial to TAZ Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And we're going to look at confluence in the term of the S&P cash. And, you know, we've got a couple of confluence levels down below. The first one takes us down into just under the 1750 level. And most people would, they're probably going to scream. My guess is that the one that truly shows the market and where it's probably going to go is really this 1660, 1670 level one. I'm going to put my mouse over it here. I need to get a telestrator. That's what I need to do. I was looking at it last week and trying to find some software that allow me just to draw all kinds of stuff everywhere like they do on a football thing. I'd figure I'd probably draw people just running around on my charts, kind of like a football thing. There he goes. But anyway, if you look at it, that level is the 1660, 1617 area. And that's probably where I think we are going. There's a gap there. And if you really look back at the volume, if I get back here, probably the worst case scenario, I think, on this big move back would be the high volume day right around June 24th of last year, and that's at 1560. So let's say that we do just blow up and everything decides to give up the ghost and roll over. We could be pretty far down out here. In fact, let me update my charts here so we can take a look, because I'm going to be watching, just like you, every tick here before the end of the day. Probably too much, but we are under that 1800 level on the S&P cash, 3.1 billion shares, so we've got wide price spread. We've got 2 days of it. Both days have had decent volume. This one will have big volume, and I can see going in here. Now, some of the people are going to ask, well, is this just a nervous market? And I think you have to say yes, a very nervous market, but probably very reasonably nervous, and that is mostly because we see the emerging markets have so much problems. A lot of the gold move can be attributed to some news out there. In India, they're taking off some of the restrictions on importing gold. They've always had a cap on just how much could come into the country. And a little bit, I think it was one of the descendants of Gandhi came out and talked about it. I don't think it was actually passed. So probably more news rumor than actual reality, at least so far from what I could see the earnings last night. But very interesting moves in these markets, and of course the Chinese curse is living in interesting times. We're going to do a lot of charts today just because I think they're going to be more illuminating than the news today, so we're going to get into them just a little sooner. One of the ones I thought was most interesting was this O'Reilly Automotive Parts. It seems that every year the fleet of cars in the United States gets older and older, and that this has been the one that even at highs has been able to buck a trend in the larger market. And that is, even at highs when the market's rolled over, O'Reilly has gone higher, and the volume has come in. This was the first time in a lot of times that the markets have moved up that I've seen it fail. Now, what I was looking at is this 135 135.62 high on October 17th. It had 1 million shares, not horribly bad. There's stocks with a whole lot less volume at the top. But even this one came in 30% light on January 22nd. It did go above it. It closed right back below it. And to me, that was just about everything you needed to know. Now, yesterday during his show, Andy Heck was talking about some of these energy companies with the crack spread, and he brought up Valero. I hadn't looked at it, but one of the things I do want to show is a pattern called the double repo, and I'll bring this up especially in parabolic markets just to show what this is doing. But if let me get the displaced moving average 3x3. What you're looking for in this, and I'll show it to you here. Is this it? Is that right? It is not. I'll get this fixed during the break, but we'll look at it in a minute. Anyway, you can give me a call, 877-927-6648. That's 877-927-6648. And I'm not in my office, so I can't get my email. If you email me now, I'll try to email you back over the weekend. But at the moment, no email, so you will have to call 877-927-6648. Thank you.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with NADEX. NADEX, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, NADEX allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with NADEX in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. NADEX is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the NADEX banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Darryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on NADEX in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade NADEX spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the NADEX exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the NADEX box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
And we have some questions in the den, and I think one of them was to look at Netflix, so we'll look at it real quick. NFLX. The question is, what do you do on this? Is this still a 30-gap play? And the answer is, yeah. I went back and looked through a few more of them. The question is whether or not you want to be here. This has, 25% short interest or something last time I looked at it. You're going to have to wait for that to bleed off. This is still a highly manipulated stock. I'd give it a few days, and if this thing starts showing some weakness, as almost everything out here has, that could be it. But if you're in a big and expensive stock, the easiest way to distribute it is get everybody bearish on it and then jam it up and force them to cover. It is what they call natural buyers. I suspect that that's part of what we're seeing now. When you look at the books of Netflix, I can't actually come out and say it's out and out fraud or even sort of fraud. I just don't think that the books actually accurately depict what Netflix is doing. The reason I say that is how many of the titles that they no longer have on their service anymore. They cut down a great deal of the amount of titles to get their profits back where they wanted to. All you have to do is use it. They still won't have, there's still nowhere you can go to get a list of what titles they actually have on streaming. They won't do it. And the reason why is they get in and out of these when life suits them. And it looks like they have a lot, but it's kind of balls in the air. Now, they've had really bad accounting practices, in my opinion. and that is that they will get a new movie. I forget what they're pushing out now, but one of the new recent movies. Hey, we've got it on Netflix streaming now. Well, that's great. But what they do is everybody's going to watch it in about a month and a half, 6 months, something like that. But they write these things off into 3 years. And that would be great if everybody watched them for 3 years, or there was even a linear taper into 3 years. There isn't. There's a linear taper into about 6 months, and then you get down to 1 or 2 or 3% of the people watching these movies after everybody's seen them. This isn't where you have a movie that repeats Saturday afternoon, and every Saturday afternoon it's raining. Everybody just happens to turn on the TV and start watching it. This is where these guys are paying for these no matter what. And I suspect this is a great and wonderfully engineered short squeeze, and I suspect we're probably going to see the signs of the giant whales like Icon selling this thing, but I'm going to say give it a few more days. They're coming off their earnings. Same thing with Microsoft. You just can't short stocks that have come off really good earnings. Now, I just think that why their earnings appeared to be good, they probably weren't as good, and I think most people on Wall Street knew it and do know it, but they're not going to say anything. They didn't say anything about the guy running the phony Ponzi scheme for 15 years. They're not going to say anything about a stock being up here at these high levels. They're going to be wanting to sell it just as much. So, yeah, the streaming names are cut back huge, and I think what you're going to see is that short interest in Netflix was much higher. If you remember when we talked last week, someone said, yeah, 13% short interest in Netflix. And that's because the people getting in and out of that on the reporting date. And I think that's actually, don't forget Lou. Oh, we've got Lou from Nashua. How you doing, Lou?
Fine.
You were buried in one of the IMs here. So what can we do for you today?
I just want to know where your target is for the S&P. I'm not sure.
If we fail here, it is 1670 from my first target, and the next one down would be in that 1550 range if you break through that.
And what's your time frame?
3 months, 6 months.
3 to 6 months. Okay.
Yeah, it's going to be. I think we're going to have a long, drawn-out pullback. And for a model, I think you could look at gold. You know, gold went up to $1,900. It tortured people for a year and a half or 2 years or whatever it did, coming back down, right? And that's exactly the way, even if this is a bull market, it's going to torture everybody, give 20 false clues to get long, and slowly melt all the way back down. So it is one of these things where, you know, you want to wait until you get a good bottom into this market, and it's probably going to take a couple of times bouncing down at some level to set a bottom into it. But everything that I see here in the last couple of days says that we could see, you know, a pretty significant move to the downside. And 1670, not really that far back down compared to just how far we were pushed up. Now, also remember that as earnings in the S&P 500, I've seen 3 different studies, and they all come up with almost the same number. And that is that earnings in the S&P 500 stocks, about 1/3 of it's attributed to artificially low interest rates. And people are kind of thinking that those are going away. And I think that's a much bigger deal than the QE. I think that, you know, they were just having free money to run your company, especially in these bigger S&P 500 companies, is just, you know, I don't think you can state how much of these earnings are based on the fact that they got free cash.
Right.
And as that goes back up 3, 4, 5%, it's going to totally change the profit outlook for these companies. But I think you can also look at, in fact, I saw it on CNBC today. One of their info babes was talking about, she was down in, what was it, the Caribbean. She was talking about Puerto Rico and how big a trouble financially they were in, because they've planned everything out in the next 20 years to look like they're going to have 2% interest. And how big a problem it was for all these third world countries that thought that they were always going to have access to just infinitesimally low interest rates. And now that they've even started to creep up, we're seeing Argentina, all these other companies really start to crack. And I think that's fairly good. But you were talking about the S&P, so let me go ahead and bring that chart up just so we can say something. You saw it before, though, right?
Right.
Okay. But, I mean, go to retracements. I mean, you've got, if you want to just look at the bigger ones, you have possibly one in this 17. It's a little wider than I like, 1730 to 1710. That's probably going to first find the first level that we bounce off of. And then as we go back into more time, we're going to look at this one that I think is the one that is really going to be where we're at. It's the reason why is we've got a gap at that level, we've got a bottom at that level, and we've got an extremely narrow range at that level for confluence. And confluence is all about narrow ranges over long terms. And I think that's probably a better indication in that 1670 range of where we're going. But look for the first bounce in that just under 1750, 1730 range. I think we're going to find the first one, and then probably going to go up for 45 days or something like that, and then start moving back down, setting up the ABC into that 1660, 1670 level. At least that's my scenario at the moment.
Right, that sounds very good. I appreciate that.
You bet. Confluence wins. Make sure you have Tom's book.
Okay.
Huh?
Yes, sir.
Oh, okay. Just bone up on those confluence levels, because I think just like gold showed fairly accurate, at least the gold miners did, I think the rest of them are all set up very well to work with those confluence levels. So anyway, have a great day. We're going to go to Sue in Bethesda, Maryland.
Oh, thank you so much, David, taking my call. Appreciate that so much. Can you help me look at the two stocks?
Facebook?
One is a Facebook, yes.
Okay, we'll look at that one first. What are you looking at here?
Well, I purchased it higher than that and keep dropping. I just wonder, should I still hold it or?
You know, I'm not a big fan of Facebook. I would much rather own, in any pullback, which I think we're having, I'd much rather own LinkedIn than Facebook, because I think LinkedIn is more of a fad stock than LinkedIn. Facebook is still trying to figure out how to make money. LinkedIn's already got that down pat. And this thing's kind of moved back down. Let's take just a little closer look. I mean, certainly you're probably going to see this thing pull back to 50. So how much did you buy it at? Excuse me?
Should I just take it off?
Yeah, you could sell it. What price are you in it at?
58.
You own it at 58 right now?
Yes.
Sell it.
Okay.
I wouldn't even blink.
Okay.
The market is too scary here to actually get into this, and certainly the place to buy this, if it pulls back to 50 on light volume, that's the only safe place to buy it. So you would want to have a lot of patience. Keep your money in your pocket, and at 50 bucks, if it gets back there to that little gap up, that gap had 239 million shares or something. You're probably going to find a nice level of support there at 50. Why did you buy it at 58? You just thought it was going higher?
Yeah.
Yeah. Don't buy the highs, buy the lows. And buying up here at the highs, hoping to find someone to buy it at a higher price, probably not the best way of trading. But certainly at 50 bucks, you have probably the best support you are ever going to find in some of these stocks. So that's where I'd look.
Oh, I really appreciate that. And how about CLF?
What was the first letter?
C as a cat, L as a lolly, F as a Frank.
Oh, CLF?
Yes.
I wouldn't be buying it.
Well, I would have it long term and then keep dropping too.
Yeah, this thing's going back to 15 bucks.
can go to $15.
Yep.
So we should sell it now too.
I don't know what price do you own it at?
I own much higher than that because I have it for a long time.
Yeah. That's up to you. I just would. I would say that we've got plenty of volume. We're going through this last low, and we're already breaking that with volume. We're below it. You needed less than 8.2 million shares today. You've already got 8.5 million shares or 8.6 million shares. So the next logical step would be the next major low out here, which is July 5th low at 1541. Just depends on whether you want to ride it back down to those levels. I just don't see any of these stocks and haven't. When you look at Cliffs, you want to look at other stocks like FCX. And, these things just have horrible charts. And, it's not like any of these. This one actually had the double repo. Maybe this is the one I was thinking of. And I'll get into it maybe after you off the show. But this thing is, these things are wicked. I didn't like them. I know everybody was talking up copper, but boy, I tell you what, these were some horrible looking charts. So I'm thinking we've got, 3-6 months where you could keep your money in your pocket and wait for bottoms if you don't want to short.
Oh, okay.
Okay?
Okay, I appreciate that so much. Thank you. Have a wonderful weekend. Thanks.
You too. Robert from Paramus, New Jersey. We've got all the New Jersey people in here today. How you doing, Robert?
I'm good, thanks. How are you, David?
Another day in paradise if you're short.
Yeah, I've been short a month.
Okay. It's tough. Now, everybody thinks it's easy being a shorter out there. It's one of the hardest things to do. In fact, I don't recommend people shorting any stocks until they've been in the market and trading rather vigorously for at least 3 or 5 years. But go ahead.
Yeah. Well, I was wondering about IBM specifically. Would you think that's a good short to get in now, or would you wait till next week? Or
let's say that it bounced even a few bucks and you got short. You're talking about maybe going from 185 or 186 down to 159. Percentage-wise, what is that? It's not a whole lot.
60, yeah.
Yeah, and so the only reason that you would short that is if you were going to buy puts. Were you thinking about doing that?
Yeah, buying a put option.
Yeah, I mean that's the only thing that makes sense on a $185 stock, unless you think it's doing a Netflix and going to drop $90 in a day. IBM's probably it is the most owned stock in the Dow as far as institutionally owned. And the old saying is, no one got fired for buying IBM, right? And that's the problem with this thing. It's going to be a very slow mover. The only thing I'd say is you're probably long-term going to get 159 out of it. But you've got
probably better opportunities to short.
I'm just going to say there's a stocks. In fact, you want to hang on through the break?
Yep.
I want to just show you a couple of stocks that are just so much better setups for going short. We'll be back in just a second.
Thank you.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhoades, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhoades Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhoades Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
And I'm going to go through a couple of stocks real quick here with Mike, and then we're going to get to, actually Robert, and then we're going to get to Mike about UNG. But first of all, Robert, are you watching on Tiger TV or in the den?
Yeah.
Okay. I'll show you one that I just shorted, OPE, and there are just better signals out there that I think you can look at. This is a stock in a horrible sector that's just been beaten up. It's come all the way back up here. The volume has never been good. You had a high volume high on October 30th at $50.48, right? Came in and tested it with 420,000 shares, right? Mm-hmm. I'm short at $50 on this thing, and it's, what is it, printing around $46? So, you know, there are a lot better shorts out here that I think you're going to find that are a lot weaker. But IBM and Microsoft and Boeing are not stocks I want to be shorting. I want to be shorting stocks that I know that could have the legs cut off from underneath them, that don't make money now, have never made money. You know, stocks like Tesla. I know it's highly short. I didn't even look at it today. But, you know, this is a stock that really doesn't make any money. You know, now, unfortunately, everybody wants to short it. But, and a good example, and it's off $6. Mm-hmm. but I think that one even came up and tested its highs on very light volume. But there are a ton of them out here that are coming back up to these levels with no volume, no energy. Now this thing had a big move off the bottom with energy, but these things are getting back up here to the top, and if you get a couple of short squeezes in these things, 10, 15 bucks intraday, and you see them roll over by the end of the day, you're probably seeing the end of the short squeeze in those stocks. And probably a good indication. So I'm probably going to run out of time here today, but we'll get back on it on Monday, and we'll be looking at these stocks that had very light volume at the top. And if they get a little bounce, you probably can get short them next week. But I'll go through them on Monday, okay?
Yeah, thanks very much. You've been very helpful.
You bet. Okay, and we're going to go to Mike on UNG. How you doing, Mike?
Pretty good.
Well, got a tiger by the tail in UNG. It's back up to this $24 level where it had this gap down back on January 11th of 2012. And it had pretty light volume there that day. 6 million, yeah. Gap down with 6 million shares. You're into it today with 20 million shares. So what's your question?
Well, I have profit. I wanted the trailing stop. Not sure where to do it. Natural gas is trading differently than UNG because the UNG is the ETF.
Yeah, there's a natural long crude short natural gas trade. And I think the thing is broke, finally, the correlation between the two. And I think you've kind of snapped that today. And so we're probably not going to have some great technical roadmaps here. Let me just look at crude just to make sure. Where is that there? It's off 40 cents. So you've got kind of a thing where crude's not changed so much, but certainly natural gas has, which makes me think maybe the long-term trade between being short natural gas and long crude is over. If that's true, then we may see a lot more in natural gas. I would suspect, though, that we're probably close to the weather changing, and you're going to see probably a pullback into the 22s on that. Okay? Thank you very much. See you guys in about an hour. Remember to sell when you can, not when you have to.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.